If you're an early stage entrepreneur looking to raise money right now, you need to really rethink your strategy. You see, the world has changed literally overnight. And let me explain how that has impacted early stage funding. I do want to caveat I'm doing this video without any editing. If I fluff it, I'm sorry, and I'll try and keep it short. But long story short, the turmoil in the stock markets are dramatically changing early stage investing behavior. You see, one of the primary ways angel investors in particular finance their ability to invest in early stage startups is by holding money in the stock market for its fairly steady and reliable returns, and then pulling money out when they choose to make an investment in an early stage startup. Now, at this particular moment in time, nobody knows where the bottom, it's called the floor, where the floor of the markets are. So many early stage investors have been holding money in the stock market, which now isn't worth very much. So if they were to pull it out now to invest in your startup, they would be losing a lot of money. Now, that doesn't mean that they're struggling. It doesn't mean that there isn't money around to be invested. It just means the behavior of these investors will now fundamentally change until the world returns to some kind of normal up and right on the NASDAQ, on the S&P, whatever. But at the moment, if you're looking to raise money, in particular from angel investors, you really need to change your tactic. So how can we defend against stuff like this if you're an early stage startup? Well, the first thing I personally would look at, if your startup is appropriate, if it's what I call a venture company, which is essentially a company that does intend to sell in the next 5 to 10 years, so everybody wins when you sell your company. That's what a venture company is. If you are a venture company, you should adapt your story in particular to venture capital. Now, one of the reasons that's important is because you can look up venture capital funds, so these VCs who raise their money, to see if they have closed their fund relatively recently. Because if they have, they're somewhat shielded and immune to the effects of the stock market. If it's a fairly early fund, say they've raised $100 million to invest in startups over the next 3 to 5 years, their money doesn't change. So they will be able to deploy capital, is the term. So if you are a venture-able company, twist your story to be venture capital focused, which means you must demonstrate a really good exit opportunity in 5 to 10 years. You need your company to be driven by the value of your intellectual property and the story of the founders, and doing really hard things, aiming really big, is the thing that's going to win over a VC. Now, many businesses are not venture businesses. Some of them are more straightforward. You want to grow a business, you want it to be big, but you want it to live for a long time. That's what I personally call an equity business. Those kind of companies are going to be very hard to finance right now. But what's likely going to happen to stabilize the markets, what many kind of global institutions will do is reduce interest rates on debt. This means there'll be a lot more financing from banks and from those who hold bonds. So some private equity companies will hold bonds, some individuals will hold bonds, but banks in particular will be able to lend out money fairly cheaply. They will start looking for more people to lend money out to because it's their intention to stabilize the economy. So if you are not a venture business, if you are a business that wishes to live and grow and be strong for as long as you live, or as long as you choose for it to live, then seeking debt is going to be far more successful than seeking early stage angel money or family office money. Now, who knows what's going to happen? The world is obviously going to change again. But I can tell you categorically right now, if you are seeking, SEIS or EIS money at this particular moment in time, you're a bit screwed. Change your story. Aim for venture or aim for debt. Or even better, aim for sales. All the best.